And Henry just joined in, so let us know when we're live.
All right, Greg, we are live.
Great, thank you. Good evening and welcome to the Finance and Claims Committee meeting of the Common Council for Thursday, January 14th at 7:03 p.m. I'll start the meeting with a roll call of the committee members. If you can respond with present after your name. Councilmember David Hooverman.
Present.
Councilmember Tom Keegan.
Here.
Councilmember Nick Sacinelli.
Present.
Councilmember Diane Revelous.
Present.
Councilmember George Theodoridis.
Here.
Councilmember John Kides. And Councilmember Greg Burnett present. So we have a quorum. Moving on to item 3 in the agenda, which is public participation. We did not receive any emails or communications. Larry, is there anyone dialed in that wishes to speak during public participation?
No, there is not.
Okay, great. So with that, I'll close public participation and we'll move to approval of the minutes of the Finance Committee meeting dated December 10th, 2020. Do we have a motion? Thank you. Diana Revelous moves that motion. Do we have any corrections to the minutes? I know I have a few.
Mr. Chairman?
Yes, David?
Yes, I have a couple of corrections on, I don't have a page number for it. I believe it's the second page. It's the paragraph that's just above the motion for the narrative on tax collection that starts out with Mr. Huvelman. At
Yes.
the last line of that, I think the change should be that it should read, Mr. Huvelman said, we are thinking of them, and he said the work they are doing is pretty phenomenal and is much appreciated.
Okay, very good. Hopefully.
And then on the next page, it just says, Mr. Huvelman moved the item. Could we correct the spelling of my name?
Correct. Great.
And that's the only change I have. Thank you.
Okay. The changes that I have, starting with page 1 under other attendance, the name is Mr. Craig Schmidt, not Smith. It's Craig Schmidt, SCHMIDT. On page 2 of the minutes, 4th paragraph down, where it says, starts off with Mr. Dakowitz. He said, the second sentence that he said, whatever impact COVID had, it should be we're collecting our dollars, not where. W-A-E-R. I guess it should be W-E-R-E. Let's see, David pointed out the correction of his name. And then on the final page of the minutes, just correcting the name change. There's 3 places where you see Mr. Smith. If you can change that to Mr. Schmidt, SCHMIDT, and I think we'll be all set. Were there any other changes to the minutes? Okay, with that, I'll call for a quick roll call vote to approve the minutes with the necessary corrections. Councilmember Hooverman.
Aye.
Councilmember Keegan.
Yes.
Councilmember Sacinelli.
Aye.
Councilmember Revelous.
Aye.
Councilmember Theodoridis.
I abstain.
Abstain. Councilmember Kides. Councilmember Kides.
Yes.
And Councilmember Burnett is a yes, so it is approved with one abstention. So the minutes are approved. Moving on to items on the agenda 5, 6, and 7, which is the Claims Committee report, the narrative and monthly tax collectors report. Lisa, you're up as our tax collector. Item number 5.
Thank you. Good evening to everyone. We do have a number of claims that we are going to ask you to please take a vote on tonight. And 2 of those are special requests. The reason they are special requests is because they are a high dollar amount. So anything in excess of, I think it's $10,000, you have to actually vote on it. So if you'll note, there's 2 of them. And one is for 25,000 and the other is for 1.2 million, but that is covering, as you can see, the 1.2 million is covering 3 grand list years, 2016 through 2018. Both of these are as a result of court stipulations that were entered into, they were assessment appeals from the taxpayers. And our legal department, our corporation counsel's office, and the office of the assessor went to court and came to a determination that was actually approved by the court, by the judge. But your committee, the Finance and Claims Committee, does have the oversight to approve these, even though they were already approved by the judge. So I do need, they're showing on the screen now. I thank you for that. We do need you to take a vote on those two refunds.
Before we go for a vote, and I was busy looking for the agenda. That's a very large amount, $1.2 million. What's the dynamics behind that?
The dynamics behind it was the taxpayer filed an appeal of their assessment, and they basically took the city to court over their tax assessment over those years, and the city responded. There's probably dozens of these types of cases that are out there where the taxpayer will appeal their assessment. And the city and the taxpayer ended up reaching an agreement, a settlement, without actually having it all go to trial. It's my understanding that sometimes these trials can be very costly. And there was a reason why the law department and the assessor agreed to the determination that they did agree to, and it was approved by the judge. But I'm not involved with that all that much. So that's really all I could tell you about it, but it does encompass 3 years worth of taxes, 2016, 2017, 2018, that they paid their bill as we billed it to them. And now it's determined that we basically overtaxed them. We have to give some of it back.
And I assume that's the same situation with the one above for 25,000?
That is correct. Yes. Whenever you see in our claims reports, when you see court stip, it's shortened for court stipulation. It's part of a stipulated judgment that was agreed to by the court. It basically has the power of a court order. And it was agreed to by the parties and approved by a judge.
Okay. Do we have any questions about these 2 items? Yes.
I'm sorry.
Mr. Kites and then Mr. Hoopman.
Lisa, real quick, I'm sorry if I missed this. Are we reimbursing them these amounts? Is that correct?
Yes, they've overpaid. They've overpaid their, basically, we came up with an assessment for them, we being the city, came up with an assessment and assessed their property just like we assess everybody's property. And the taxpayer has the right to appeal that assessment. They can appeal it to the Board of Assessment Appeals. If they don't find relief with the Board of Assessment Appeals, they can take the city to court. And that's exactly what these 2 particular taxpayers did, in addition to probably dozens of others. And in these 2 cases, these cases have been settled without going to a full trial. The city made a determination, basically the assessor and our law department that is familiar with these types of cases, and they determined it was in the city's best interest to settle this case.
Got it. Lisa,
Both-
yeah, no, I got it now. These are the only two that, like, I remember seeing these in the past. Are these the only two? Or do we not see others because the amounts are under a certain point?
You're
Under
gonna
a
see
certain
them
amount.
all. You're gonna see them all. You're gonna see them all. If there's a refund going back, in some cases, we actually do it in the form of credits on a future bill because they might not be these large of an amounts. But you have oversight over all of our refunds, so that's why they're appearing here. But in this particular case, because these dollar amounts are so high, that's why we need to have you vote on it. It actually requires a vote. We don't actually cut that check and send it out until you approve it.
Got it. Thank you, Lisa.
Of course.
Hi,
David, you had a question?
this is Chitsime. I'm sorry to interrupt, but Bill Ford is in the waiting room.
Okay. Larry, can you let Bill in?
Yes, who needs to come in? I'm sorry.
Bill Ford,
Bill Ford.
the tax assessor. David, you had a question.
Yeah, it was just I guess it's a procedural thing since this is the first time I've seen this. We vote on this. It goes forward. You pay the refund. We vote no to this. What happens procedurally at that point?
What happens?
And without having, and also for us here right now, without having the sort of knowledge of how this settlement played out, I'm just curious.
I think that you're going to probably get more information once William Ford joins the meeting because he's the assessor. So he agreed to it. But procedurally, what would happen is I would let the law department know, and they would probably contact you to give you more information about it because they would feel it is imperative that it be approved because it's already been a decision made by a judge. And I think that the city would have a problem if we did not follow what the judge said to do, which was agree to the settlement. But we've never had a situation where the committee didn't approve the settlement. We've had cases where it's been delayed, where we needed to go back and get some more information and bring it to the committee. So that has happened where they voted to table it. That's happened in the past, but I think that as soon as he comes in, he will be able to tell you. So if you want, do you want me to just go on to the other items while you're waiting?
Let's see what Larry, is there a delay in letting Bill in? Hello, Larry?
Yeah, sorry, I just got knocked off twice. I don't know why, but I did invite Bill. He was trying to use a Microsoft Teams link to get in. I did send him the correct link.
Okay.
There he is.
All right.
He's under attendees, so I'm going to promote him to panelist.
Great. Thank you. Let's just wait a few more seconds. Okay, there he is. Hello, Bill. Can you unmute yourself?
Yes, I can.
Great, thank you.
Good evening.
Good evening. We were just reviewing the two claims items, one for 25,000 and another one for $1.2 million. And there was some questions about those two items. If there's any information you can shed on that, that would be helpful.
So both of these, one property is one of our larger buildings in the city, multi-million-dollar property. The other is a grouping of commercial condo units that Both properties actually sold recently. One sold right before the valuation. The other sold shortly after the valuation. The issue with the one that sold before was, again, there was 26 separate condominium units. So the individual units, they didn't look at the sale prices closely. So in our analysis, we reviewed the information that was provided by the property owners. We had our appraisers do some analysis. And after negotiations at pretrial conferences, we agreed to these numbers. Both numbers are close to, not exactly, but close to the sale prices. Does anybody have any questions?
I don't see any questions. Thank you, Bill, for that background. Okay, so we have these two claims to approve. If there's no other questions, I'll accept a motion to approve the claims report, which will include improving these two reimbursements. Do we have a motion?
So moved.
Councilmember Hooverman, thank you. And I'll call for a roll call vote. Councilmember Hooverman,
Aye.
Councilmember Keegan,
Yes.
Councilmember Sacchinelli,
Aye.
Councilmember Revelous,
Aye.
Councilmember Theodoridis,
Yes.
Councilmember Kides,
Yes.
and Councilmember Burnett is a yes, so it's unanimous. So we will now take these, the claims report with these two items forward to the Common Council at the next council meeting, which is scheduled for Tuesday, January 26th.
Thank you.
Moving on to, you're welcome. Moving on to the item 6, which is the narrative.
Okay, very good. The narrative follows the December report. And as you can see, we are roughly where we need to be. We're just a little bit behind. The way we ended our month of December, we were 2.29% behind where we were the year before, but still considering, all things considering COVID and so forth, we weren't doing too badly. We have a little bit of an issue since the last time I was before your committee. When I was here a month ago, we had planned for our last day to pay to be February 1st. And that was our directive at the time. Subsequent to the meeting, and actually subsequent to our bills being printed and ready for mailing, the state came down with a directive to once again offer the same relief that we offered over the summer. So as you've seen from press releases and other media since that time, we're now publicizing to the taxpayers that instead of February 1st being the last day to pay, in fact, it's April 1st. You can recall that it was April when this first all came into being. The full council voted on Mayor Rilling's recommendation to allow the taxpayers that extended grace period rather than to implement a reduced interest rate, which was another option that was floated by the state. We could do either or both, and we decided to be as generous as we were able to be to all the taxpayers and give that extended grace. So now we are offering the extended grace again. So instead of February 1st being the last day, it's April 1st. This is going to throw a little bit of a monkey wrench in our normal procedures because we normally file our liens in March. It's a tax sale year, 2021, because the 2020 sale got canceled, postponed rather. So we're going to have to play it by ear. We're not going to be able to send past due notices out until April as opposed to February. So everything is going to be kind of extended by 60 days. Right now, what we're basically doing is just trying to get the word out to folks that they have until April 1st to pay. That being said, we have been seeing a relatively brisk collection, even though we are open to the public shortened hours because we're working in shifts. So the window is open from 9 to 1. That has been working out fairly well. We're up to date with everything. We're still a little shorthanded, but we're getting through it. So if you have any questions from your constituents or anything like that, we've updated the website and we've tried to publicize it as extensively as we can, and we will continue to do that. If a bill is paid by a mortgage lender, that they are not eligible for the extension. That was the state's rule, not ours. So all the bills that are paid through escrow agents from mortgage banks or tax services, the pay by date for those is still February 1st. And the reason they did that was to try to get some good infusion, a healthy infusion of cash into the municipality so that we could still pay our bills. That was the state's decision to try to reach a compromise to help out the average taxpayer, but to also still allow the city to function as we normally do. Other than that, our collection is pretty normal. You can still pay by mail, you can pay online, you can pay over the phone. We try to make it as simple as we can. We have walk-up service or drive-up service at some of the banks. That's a little bit tricky because some of the banks have COVID restrictions of their own. Not as many people are utilizing that service. We're finding more people are paying online, which is a good thing. But overall, the collection is going about as well as could be expected right now. I just think we're going to have to keep an eye on things as we get into the spring. And I'll be glad to take any questions you might have.
Thank you, Lisa. The one question I just looking at the report, so as of the end of December, we've collected close to $211 million compared to this time last year where we collected $207 million. Is that correct?
That's correct. And what I did too, I should have mentioned, I updated my own reporting in advance of this meeting. So through from January 1 to January 12th, we took in another just close to 16 million in current collections. So whereas as at the end of December, our collection rate was 59.83, we're now up to 64.3 through January 12th. So just so that you can see, a lot did come in after the December report was run. A lot of people paid on December 31st. We didn't get to post those payments until January.
Great, thank you. Do we have any questions on the narrative as well as the monthly report? Yes, Mr. Keegan.
Yeah, just one question. We had that 1.2 million correction. You said there's about 12 more, Lisa, is that correct? That we can expect?
No, I don't think I don't remember saying that. I know that we have multiple cases under appeal.
Okay, let's leave it at multiple. Can we expect any this big in the future?
That would be a question for William. I don't know.
Well, sir, we have a number of significant properties under appeal. Merit 7, our possibly largest office complex, $150 million value, round numbers. So even a slight percentage change in value will result in a significant reduction. So that adjustment, we have not negotiated that one yet. We've had some discussions. We've had some review of their information. We have a number of very large appeals that are coming forward. Manresa Island, the abandoned power plant, is another one that's going to be coming up. So a number of different ones are coming up. We are negotiating them and trying to get the best value for the city.
And I would add that the numbers that we give you when we report these figures, these are net. So when we do have to issue a refund like that, it will affect our collection rate is our net collection rate against the adjusted levy. So we're trying to give you true numbers is what I'm saying. And you'll see that levy will change over time because of corrections like court stipulations and other adds or deducts. And also our levy actually went up between December and January because we added in the motor vehicle supplemental billing, which was 2 million dollars. So that levy does change. So there's good and bad with it. I don't know if Henry wants to add anything in on that, but that was we're trying to respond to that question.
I would just add, thank you, Lisa and Bill. I would just add that when our assessor and deputy assessor left in July of 2019, we were in a tough position because we had a tremendous backlog of legal cases among all the other work that had to be done by the office. And since Bill has come in, he's worked very well with the legal department in triaging the cases. These are ones that we have a problem with and we're going to have to pay out. Let's negotiate and figure out what's the best deal we can get for the city. There are some where upon review, we feel very strongly that we are in the right and we will go to court if we have to. And then there are those in the middle, but we're working through all the backlogs. And correct me if I'm wrong, but my understanding is that in most cases, when we have settlements, the dollars are handled on a prospective basis. And we are adjusting the taxes prospectively to make up for the differentials. In certain cases, maybe when there are large amounts, we have to cut a check. But in general, they're handled prospectively. So from a cash flow point of view, we don't get that immediate hit. So it's a whole arcane area. It's sort of the last piece in the process. We have the assessment. We then do the levy. We have people who protest and then go to the assessment review board. And if they are not satisfied, they then go to litigation. And we either litigate in court or we settle. But we're working through the process since Bill's been here just about a year. And we're trying to work off that backlog so we don't have that cloud overhang.
Mr. Cotties and then Mr. Hoovman.
Henry, have we accounted for these situations in our budget?
Well, what happens is when we do our budget, we have a collection rate assumption. We assume we're not going to get paid a certain amount. Now, historically, the percentage that we budgeted was 98.6%. And historically, we have always exceeded that. For this current year, we lowered the collection rate to 97.6. If you recall, after COVID hit, when we first got together, we were about 90% done with the budget. And one of the adjustments we made was to lower the assumed collection rate, which means that we would have to collect more money to ensure that we would get the funds necessary to operate the city. That was a bit of a buffer for the unknown of COVID. At the same time, you may recall that last year, we were the beneficiaries of a fortunate timing where on the new Sono Mall, the abatement did not commence until they received a certificate of occupancy. The grand list is done, I believe. Bill, correct me, is it October 1st?
It is based upon evaluation day of October 1st, yes.
So it's based on October 1st, and they did not get their certificate of occupancy until sometime later in October. So it's a bit of a technicality. In essence, we were fortunate so that in this tax year, there was, instead of the abatement of a 50% reduction, we were billing and expected collect the full amount, and the differential was $4 million.
And Henry, not just the collection rate, but also the successful appeals, not to just backtrack a little bit. Was there any accounting for that?
We
budget?
always,
I think I can answer that. We have a $3 million reserve built into the budget. It's been $1.5 million historically, but during the reval, it was bumped up to 3 million in 2020, and it's 3 million for 2021.
And
I
now
think,
with these two deductions of I don't know, say $1.5 million that we've approved tonight, whatever the case may be, where are we with that number now? Have there been other, I mean, I haven't seen anything this year. Have there been other successful appeals that have drawn down that $3 million?
As far as I know, this is the largest, so the others shouldn't be a material. So we could take this from the 3 million and that's our balance.
All right, great.
there's
Thank you.
also, John, there's also the issue of a 5-year cycle, because we do the revaluation every 5 years. So what happens is the first 2 years after the reval are when you're going to have the most appeals, and you're going to have amounts that may not be collected because it's determined either in the courts or by settlement not to be collected. What happens in years 3, 4, and 5 of the cycle, we can take that reserve lower, because just based on historical patterns, there aren't as many dollar amount successful challenges. So it seems like the numbers are falling into place. This was significant, but when you recall that the reval increased the grand list, I believe, double digits. So it's not unexpected. We know there's a certain amount, we just don't know which properties are going to have that. So I think we've budgeted carefully, and we're in good shape.
Okay, so you don't see any of these, William, that you spoke to, any of these other these appeals that are in the process, you don't see them exceeding the numbers we've seen tonight?
I believe we've properly budgeted for it, as Henry said. I think we're in a
Great.
good space.
Good to hear. Thanks, guys, ladies.
David?
Councilman Kitey's pretty much asked one of the questions I had, but these claims refund is based on before the reval, correct? These were earlier cases.
These are 2018
18.
revaluations.
Okay, so what we're talking about, things that are pending now, are based on the 2019 evaluation, correctly, or no?
No, sir. They're actually we had, I believe it was over 400 cases. There's still about 6 2013 cases that are floating out in the courts. We're still working on getting those handled. And when I came here, there were a little over 400 cases, and we've been working on getting those handled. These are all 2018 cases. The only significant 2019 case would be the mall. They, of course, filed standard procedure for your large corporate commercial property owners.
So then, looking at the fact that we're not going to catch the windfall this year because we caught it last year on the mall, and the delay now because of the governor's order into April, is this affecting how we're looking at pursuing the budget as we move forward, or not?
Let me make sure I understand the question. 2 parts. In essence, this coming year, the budget that we're developing now
Right, 22.
will be the first year of the 7-year abatement period. So the abatement is 50%. So last year, full property, and we expected the first 7 years of the property being occupied, being abated. So that's why last year, the first year, was a windfall. It's just timing. We're now going to have, it sounds very biblical, 7 lean years at 50% of full value, and then we'll go back to the increased value. So if anything, in this coming year's budget, we have a $4 million gap that we have to make up. Okay. I think between the collection rate and the reserves we have for litigation, we are covered. We never want to be in a case where we have a revenue shortfall. So we budget conservatively. And as I said, we think we're in good shape based on what we've seen so far.
But if we're looking at that $4 million gap right now that you're referring to, and then we add to that, right now we're running, a couple percentage points behind, which may carry over. We don't know. I mean, we're looking at that way. I'm just looking at how, based on that, if we're in gray area territory moving into budgeting for 22,
I
or
think
if you think we're okay.
for fiscal year 21, I think we're okay. I think
Okay.
the conservative collection rate of 97.6% will cover us. And I think the reserves are covering us with the litigation and how those cases are moving forward. The challenge for this coming year's budget, and we're right in the middle, the mayor and I come out with our joint recommended operating budget. I believe it's February 8th and 9th. So we're still working on that, and we have to look at all those assumptions. It's still moving pieces, the departmental expenditures, the revenue and collections, the Board of Education, what will happen to the grant list, what our expectations are, and then the mill rate so that we generate enough revenue. So we're still working on that. I think I feel very comfortable for this year so far, ending June 30, 21. And we're using our knowledge for the budget year from 6 to 18 months from now. And hopefully things get clearer with each month. By the time we finish that process, we again hope to be in a place where the budget is satisfactory for what we need.
Okay. Thank you,
Okay.
Henry, for that clarity.
You're welcome.
Great. So, if there's no other questions, I just want to be conscious of time because we do have a hard stop a few minutes prior to 8 o'clock for the special joint meeting with the Board of Education. If there's no other questions related to the narrative and monthly tax collectors report, both of those items are for informational purposes only. So thank you, Lisa, for the information.
Thank you.
Great. In the interest of time, if it's okay, I'd like to take item 9 on the agenda first, because that item requires a specific action from us. And then time allowing, we'll finish off with the update from Oak Hills. So with that, let me bring up. The item as follows: authorize the mayor, Harry W. Rilling, to enter into agreements with Value Payment Systems LLC, a sole source provider, T-Tech LLC, and WorldPay US Inc. for electronic payment processing services in support of municipal online permits, inspections, fines, and fees for a period of 36 months in accordance with the terms and conditions set forth in the agreement, account number as noted. Do we have a motion on this particular item? Councilmember Keegan, thank you. And we have on the line with us Karen Del Vecchio, who is our IT director, and Joyce Liu, who is our IT manager, citywide application, to speak to these two items. So Karen and Joyce.
Thank you very much. Good evening, everyone. So what this item is the city entering into an agreement with Value Payment Systems. VPS is an electronic payment company. They do electronic payments for the IRS, for federal tax payments, for a number of different states, for state income tax, and counties and cities across the U.S. They are the preferred partner of Software Consulting Associates, SCA, who is the vendor that has written the Municity system. Municity is the excuse me, permit and inspection system that the city uses for code enforcement, planning and zoning, conservation, rolling out for the health department prior to COVID-19, and also for public works for their road opening. In order to be able to take applications for permits online, because those applications 9 times out of 10 require a fee associated with them, we need to have a partner in order to have the credit card processing or an online collection system in place. The city does not collect credit card information. We don't store credit card information. We partner with third parties, banks, and credit card processing firms who do this type of thing. They have systems in place that are secure, and we've partnered with a number of them over time. This is a sole source provider because Municity has actually written a very tightly integrated interface to this VPS organization. We looked at the option of using another credit card handler or processor for electronic online payments, but then the responsibility would be on the city to make sure that that integration takes place. And we're not really in a position to do that. So we have vetted this organization, VPS. Again, they're handling the payments for the IRS, so we're comfortable. We're comfortable with their security posture. That they've passed sort of those tests, if you will, and have those third-party attestations for their security posture. So we're comfortable with that. Joyce was able to negotiate with VPS. They did a price match, if you will, on some of the ACH with another vendor that we had been using for another electronic processing. So this is the request that is before you. It's for a 36-month period. There's actually no cost to the city to be able to do this. Chitsme has talked to the vendor at length about this in terms of the back end, where they're collecting the funds on behalf of the city and transmitting those funds into our accounts. So any processing fee is not paid by the city. That would be paid by the fee along with the online permit. And it's a very, very small fee, a very small percentage of what that would be. Once we have this in place, then we can work with the department so that they can now start taking online applications. So this is a big step, and it's an important first step. We need to have this in place before we can go forward with being able to take permit applications online. Did I cover everything, Joyce?
Yes. So for the credit card fee is they are charging 2.65%. And for the ACH transaction, they're charging 95 cents.
Per transaction, right?
Yeah, transactions. That's where the TTAC LLC, they are they are the company they are using under VPS to do the e-check processing. And the WorldPay LLC US is doing the credit card processing bank they are using.
Right. So there's 3 entities together, and the city would enter into an agreement with all 3 of them.
All 3 of them.
Correct. And we'll work obviously with the law department to make sure that they review all of those terms and conditions. But again, it's the first step to the city's goal to be able to take these. And COVID-19 has really demonstrated that we needed to accelerate this process. But this is an important first step so that we can take those online electronic payments so that we can move forward with taking those applications online.
I would just add, if I might, this is a real coordination among the controller's shop, which deals with all cash collections, the IT department to make sure electronically it's appropriate and that we have the proper cybersecurity, and then the legal department to review the contracts to make sure we're covered. So we keep breaking down whatever silos there are, and we tend to work more collaboratively cross departments on different projects to make sure we get the best value for the city. And this is just a great example of that coordination.
Are there any questions I can answer?
I don't see any. I think this is a great step forward and positions us well for future interactions. So this is just the beginning. So if there's no other questions, I'll call for a roll call vote on this motion. Council Member Hooverman,
Aye.
Council Member Keegan,
Yes.
Council Member Sacchinelli,
Aye.
Council Member Revelous,
Aye.
Council Member Theodoridis,
Yes.
Council Member Kaides,
Yes.
and Council Member Burnett is a yes, so it's unanimous. We will bring the item forward, Joyce and Karen, to the next council meeting scheduled for Tuesday, January 26th.
Terrific. Thank you so much. We'll be there.
Great, thank you. We have about 10 minutes left, so we'll move now to the update from Oak Hills. And we have Joe and Drosco, who's from the Oak Hills Authority Board of Directors tonight to give us an overview on the November 2020 numbers and time allowed a review of the June 30th, 2020 audit report. So, Joe?
Sure, thank you. Yeah, in terms of November and December and probably the next couple of months, this is when, we enter into a lower sales, lower revenue environment. So we actually start running an operating loss. November, we turned a small profit of 24,000 operating income, which is actually about 90,000 better than prior year. The early read for December, which is preliminary, not included in the report, of course, is that we have turned into an operating loss, but it's a little smaller than it was last year. Operating loss of 52,000 versus prior year of 65. So this is exactly as expected. There's just much less revenue for golf across the industry in the winter. Well, I should say up north across in the winter. But we're tracking better than budget. Our cash balance, which is something I always like to highlight, as of December 31st, was about 325,000 versus 63,000 last year. So we are in a much stronger balance sheet position. And even more so because last year the 63,000 was buoyed by 20,000 in borrowing from our line of credit, which this year we have no borrowing from our line of credit. So December financials quite strong, even though we are turning an operating loss so far. We expect January, February also to be at a loss. March starts to turn around, but still can run pretty thin to the margin because the revenue is still not quite there. It's not quite spring yet. Any specific questions on the financials I'm happy to talk about, or I can go into audit, and there were a couple of other items I wanted to just mention quickly. Okay, regarding the audit report, there's really only a couple of takeaways that I think are important. The first is that the financial the conclusion of the auditors was that our financial statements are prepared in accordance with GASB standards, and there's no evidence of internal or external fraud. Always a good thing. They also determined that we generated enough cash flow to service our debts and hence rated us a going concern. This doesn't seem like a big deal. It's been the case every year I've been part of Oak Hills to be rating us a going concern, but I will say that this year was a bit easier than prior years to kind of get that rating. And then finally, the last thing in the audit report is they confirmed audited golf revenue of about 1.47 million for the prior fiscal year. This is an audit of fiscal year 20, which ended June 30th, 2020. And once that audit was completed, of interest to this group and several other groups, I'm sure, is as per our consolidated debt repayment agreement, it triggers a 1% of golf revenue annual payment to the city, which has already been cut. We've sent that payment of, I think, 14,700 to the city, bringing our total payments to the city for this fiscal year up to about $67,000. And that's as per our agreement to pay $2 per revenue round and this 1%. Naturally, the next couple of months, we're not going to be generating a lot of revenue rounds, and we won't be sending very large payments, as I already mentioned. The next point I wanted to make was on season passes, which I know has always been of interest. We did put through some price increases for calendar year 2021 of about anywhere from, well, certain packages rose 0%. We didn't change the price, but they were few and far between. About 45 to I think 80% was the highest price increase. This was after an extensive analysis to determine where break even was and determine what level of discount was being provided to the people who bought these and used them through about, I think, end of October. So they were available May to, and we cut this analysis in October. The sales that we've had so far, and I have data for 21 days, December 23rd through January 12th, is that we sold 36 passes at the higher price points for a total of 71K revenue. And for the period, a similar 21-day period starting May 9th last year, which was when we first introduced these things, we sold 72 passes, double the 36 that we've sold, for $92,000. So for only about $19,000 more revenue. So we think we're getting the price point right. We expected, based on projections, to sell about 50 of these things. We've already gotten to 36. And I will note, you know, we've sold 36 versus 72 in the comparable period last year. But that comparable period was May, when golf was on people's minds. There were also holiday travel and just, you know, closures for the holidays of our offices. So there are a couple of things that make these time periods non-comparable, but we do think that we're not destroying revenue by raising the price based on the early looks that we have so far. That was the only additional item that I really wanted to touch on, but I'm happy to take any questions.
Mr. Kaitis, and then Mr. Hoovman.
Hey, Joe, how you doing?
Well, how are you?
Did you approve the new specifics for the new season pass yet?
Yes, so that the numbers that I've talked about reflect the price increases that we put through as part of our pricing determination in December.
So how early a season pass holder can book a tee time? Has that changed in 2021 versus 2020?
Indeed it has. So there's a little bit of a nuance, but anyone buying a new pass has 8 days advance booking, while the general public has 7 days advance booking. That used to be 14 days advance
14
booking
days,
and
okay.
7 days. So we've basically collapsed it to an extra one additional day. That should alleviate some of the problems and concerns that we've had from golfers about not being able to get tee times unless they have that season pass.
Great, thanks, Joe.
Yep.
Hey, Joe, it's David Huvelman. The question I have is I've had some people that have contacted me who have the prior pass that's good, supposed to be good until April 30th, and they're having an issue. You're still honoring their 14-day advance, correct?
Correct.
Okay.
I think there's a systematic change that we have to get the vendor to push through. So there may be some delay, but we've been in contact with a couple of folks regarding that problem, and we're working through it.
Okay, great. Thank you.
Yep.
Joe, is there any traction on a new vendor to cover the restaurant?
There is. We're in discussions with a couple of contractors. Because of that, I don't want to get into too much detail, but we do fully expect to have restaurant operations up and running by April 1st. It's a little different in our situation because we have the facilities, we have all of the infrastructure in place to be able to kind of turnkey operate that business.
Great, thank you. Any other questions for Oak Hills? Okay, hearing none. We have about 3 minutes to jump on the special meeting, joint meeting. So with that, I'll entertain a motion to adjourn. Mr. Keegan, thank you. All those in favor, you show by raising your hand. It appears to be unanimous, so we are adjourned. Thank you, everyone. And I'll see you in 2 minutes on the special meeting.